in the business and the politicians.
Think global, but act local. Let's make that a reality.
At these times, only on CNBC TV 18.
This is Network 18, and you are watching CNBC TV 18.
Welcome back. Still struggling in trade. It seems on current reckoning we'll probably close below the 4100 mark. The big disappointment, as I keep saying, is the market bread today. We haven't seen such an abysmal gap between advances and declines for a long time. And when you see 9-10% cuts on many influential stocks, if not all of them large cap, it can be psychologically quite a setback. We've been speaking with S.V. Prasad and Sudarshan Sukhani. Rajiv Mantri joins in as well to talk about trade. Rajiv, afternoon. Do you think this will be it in the downturn, or do you fear that the markets might be headed for deeper cuts?
I think this is a reaction to the budget, which was in a word unmistakably socialist. And there are two features that I'd like to draw attention to. The first is the finance minister's reference to Indira Gandhi's bank nationalization as visionary, and I don't know what kind of signal that sends to foreign investors. And the second feature is his reference to or other acknowledgement that the growth from 2004 to 2008 was driven in a large part by private investment. But the budget does nothing to encourage that or reward that.
So what do you see for the market now, Rajiv, in the near term?
In the near term, I think, I think we are still digesting the kind of surprise budget, if you will, because, all the hopes had been built up from the Congress's quite resounding victory in the elections, and those hopes were kind of disappointed with the kind of socialist and populist budget, if you will.
Okay, let's see what R. Sukumar of Franklin Templeton is saying about the market and valuations now before we turn back to trade today.
I think earnings season, you have to look in the context of what's happening in the world. So I think many Asian economies, we are looking at a contraction in earnings in 2009. Compared to that, I think consensus is looking at flat earnings for India for the calendar 2009, which is not bad at all. They can do slightly better or slightly worse. I don't think the variance is going to be too big. So and if you look at the fundamental value of stocks, the near-term earnings probably should have an impact of 1% or lower. Market valuation, we are below the 10-year average, and I think we are reasonably attractive. I wouldn't say we are very cheap, but I think these are levels I think people can invest confidently for the long term to get reasonable returns.
That's the view from Franklin Templeton. They've launched a fund today, so there will be a couple more coming in from the NFO front, and he thinks that for the markets, perhaps earnings will be the key. Still struggling, like I said. Sudarshan, you were talking about real estate. What about infrastructure? Are those stocks a buy on dip to you, or over there as well you see the big up move ending?
No, I think the up move is not ending in infrastructure. The second point is that that's probably one of the few sectors where you can buy on dips. So there is little choice also. You have to go to infrastructure if you are looking for the long term, if you are looking for a trading opportunity. The only question is whether you want to buy now, because the definition of a dip is still under question. Should you buy now hoping for a rally, or should you let this correction exhaust itself and then buy? That's a choice for traders to make, but I would still be upbeat on infrastructure. Since we are making political statements, sorry Mitali, the finance minister had to choose between 115 crore Indians and foreign investors. I think he chose wisely.
SV, what do you expect to see from FII flows over the next few sessions? Because last 2 days, Monday and Tuesday, they've sold about 2,500 crores in the cash market. Do you think that will continue given the global environment, or it will get arrested?
Difficult to give a clear picture, but my inclination would be that it would continue in drips. I don't see that getting corrected in a hurry over there, because not so much in India issue as much as a global issue. If we see that global markets are coming off, and whenever global markets come off, typically the foreign investors tend to be a little nervous, So and there's nothing for India to offer is India specific. The budget is over. There are no earnings, as Sukumar also mentioned a little while ago. So my kind of suspicion would be that it would be a dripping kind of removal of money for some time now.
Would you worry, SV, about all the companies that have QIPs lined up now?
I would be concerned, frankly, because in some sense the mood has changed. The mood that was very upbeat, I would say overly upbeat before the budget, the mood has become a lot more morose now. I'm talking more of the India mood. Therefore, I would be concerned, and especially pricing. We've already seen a few of them had to pull off. Few of them haven't done particularly well. So I would certainly be concerned. And sometimes I also wonder, why should people kind of rush off into, make a rash of QIP announcements, especially when you know you had such a big impondable like the budget, which is kind of going to be around the corner. So sometimes I wonder why people had to kind of rush off. Clearly there's been a change in mood post the new government coming in. So why don't you allow things to settle down and then kind of go on a fundraising exercise?
Sudarshan, a couple of heavyweight charts for you. ICICI Bank at 650, L&T at 1420.
L&T has a much better chart. That's because it belongs to the infrastructure, capital goods, that section. At some point, this decline will end, and this is the group that will lead the next rally whenever it happens. ICICI Bank is worrying because the entire banking sector seems to have collapsed in the last 15-20 days. So there is some fundamental change taking place which you are better placed to judge and explain. But for me, the charts tell me that banks are not a buying opportunity now. For the long term, they appear to be very attractive, but there is no trade currently.
Okay, let's hear out some trading talk now, because the Nifty is set to close unless something dramatic happens in the last 5 minutes below 4100. And the Sensex certainly will close well below 14,000 today. Let's see what some of our trading experts are saying. We'll come back after that with the last 10 minutes of trade for you.
I think the situation is very ideal for some more declines to happen. The key part is that for the last few days before the budget, I think Nifty was taking good support in the range of 4230, 4250, and then on the budget day we saw kind of a big breakdown below that level. Probably we are in for good declines. Yes, 4000 is likely to be taken out. 3800 seems to be a very, very likely target over the next few days.
If 4100 breaks, that's a daily close with volume and with a lot of momentum, we may see the Nifty to around 3600, and that's a lot of damage. 3600 also becomes another important area. A 12,000 on the Sensex or a 3600 on the Nifty, in case we go below 4100, close below that, is something that is possible. This theory will get violated in case we go above 4500.
Now 4150, 4200 was acting as support. We feel this support would breach and would go down. We are expecting market to come down to 4000, 4050 odd levels. I'll use any rise here of 20-30 points to go short and trade with negative bias in this market.